up against the capital gain taxes, and I had listened to actually a podcast with you, and I believe it was Buck Joffrey's because he's in the
So
healthcare
Brett, I forgot the jacket.
it was something that was very interesting, and just realized what a gem and what a unique find this capital gain solution was. Sure. So realizing that Sedona was a very desirable place, and just being a family looking for rentals and kids that were wanting to just get away for the weekend, it was really difficult to find anything. So the thought was, well, if there's a market out there, let's see if we can purchase something. So looking in the Sedona area, we put in bids on multiple houses, and it was really challenging to get anything if you weren't a cash buyer. So we found a new subdivision, and it was a beautiful property that had Oak Creek running through it, and so we purchased a home up there, and looking to do Airbnb, some rentals with that, and then be able to use that as a weekend, retreat every once in a while so that we can have that opportunity, since it was really challenging to compete with all the other people that were trying to get rentals as well. So branched out into that, purchased the home, and then it actually ended up being more challenging than we had thought for this new community. The neighbors were, it was a higher end community. It was really nice, but it was a difficult rental because just the neighbors were challenging, and so we're like, well,
Hey Brett, can you hear me?
yep, absolutely. So having those
I
challenges,
think my new camera's
okay,
working.
we can navigate this.
Rebecca, how are you?
Great. How are you today?
It's a wonderful day. I can't complain.
Yeah, it finally rained here, which was
Again, and
well needed because of the fires. So it poured last.
found the area to be
That's
really relaxing, and so he bought the house on the hill above us
Oops,
for
I'm muted again. There we go.
$100,000, double what the asking price was.
I think Brett's trying to get his volume to turn on.
Started buying it for
Oh,
that
shh.
and so we posted ours. We purchased it for 1.3 and posted it for 2, and ended up selling it for 1.8 to this gentleman who bought it for, I believe it was his mother-in-law, and he had bought 4 or 5 other houses in the community. So we were like, hey, this is perfect. The timeline, though, it was a 6 month, so we would have been definitely up against the capital gain taxes. And I had listened to actually a podcast with you, and I believe it was Buck Joffrey's because he's in the healthcare field too. And so it was just something that was very interesting, and just realized what a gem and what a unique find this capital gain solution was, and had looked into that originally for selling the business because, growing it from, a family owned business, there's a significant amount of capital gains involved. And so looking at that, and then actually was able to reach out to you and say, hey, we have this property, we've sold it, and the rest is history. It worked out beautifully. So, saved hundreds of thousands of dollars in taxes by being able to work through this capital gain solution, and then actually ended up being able to purchase a small lot to build on in the future. So it worked out beautifully.
Yeah, it's a nice thing when you can have an extra, so typically 30 to 50%, depending on the depreciation recapture, what state you're in. And if Biden's proposal goes through, he's considering doubling from 20 to basically 40 on the federal, which will be 50 to 70. So to think about that is staggering, right? You buy something, you take the risk. It doesn't necessarily work out on the rental side, but you have, oh my gosh, the appreciation is so high. And now that huge amount is just going to be gone versus being able to defer that and build and create, preserve more wealth, which is really fascinating and really amazing. That's why we believe in what we're doing. All right. Hey, everyone. Welcome to another, let's say, meetup here. Deferred Sales Trust, Capital Gains Tax, Cryptocurrency Mastermind. I'm so excited for you to be listening. If you're watching this on a recording or if you're live here, we do have a couple guests I'm going to introduce here in a second. But my name is Brett Swarts. If you haven't met me, I'm founder of Capital Gains Tax Solutions. And every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern, we are talking all things deferred sales trust, trying to demystify this thing that, wow, sounds too good to be true, sounds amazing. How do I make sense of it? Does it work for me? Can I hear actual deal stories? If that's where you're listening or why you're listening, you're in the right place. I'm excited to also be with my co-host and business partner, Jake Miller. Jake, how are you doing today?
Life is really, really good today. I'll tell you that. A lot of great things going on, and definitely a lot of exciting opportunities out there that we're helping our clients with. And I can't complain, not one bit.
Excellent. And by the way, Jake Miller is a certified financial planner. He just came on the podcast just literally 30 minutes ago. That is live on YouTube now, dropping on iTunes probably in the next week or two. Make sure you hear his full story. Really fascinating story, cool story, exciting story, inspirational story. But Jake, other than that, how we had our first rain yesterday in California. I know Rebecca's here with us. Well, she's a luxury realtor up in the Truckee Tahoe area. So let me actually just pass it to Rebecca. Rebecca, did you get the rain where I got it here in Sacramento and Roseville?
We did get rain. Yeah. And it poured all night, some lightning and thunder. But yeah, so grateful for getting the rain that we desperately needed. Yeah. It's good to hear you
Felt
guys
so
got
good,
it
right?
too.
Just like all the smoke and all of the ash and all of the just felt like it's just going to cleanse out of there, right? And I'm hoping more comes. It's looking like a little cloudy right now, but I'm thankful for even just one drop. So I'm excited to have Rebecca here, and then we also have Adam here. Adam, you're welcome to stay mute or jump on. All good either way, and we're going to be talking here about a deal close story. Is typically the second part of this, and the third part is a cryptocurrency, kind of breaking the whole process of this and what we're learning along the way. So that being said, Jake, would you give us the vision for our mastermind? What are we trying to accomplish here?
Ideally, we're helping people with highly appreciated capital assets who would otherwise pay a lot in taxes. We're helping them navigate those waters so that they end up landing the ship on the other side without having to give up so much to Uncle Sam and Aunt California or whatever state that you reside in.
Perfect. And now let's move into the deal close story. Now this one actually goes back a little further. We didn't actually have one last week. We had a couple pending. So I wanted to share one that starts with a gentleman actually about 4 years ago sitting in a room learning about the Deferred Sales Trust from not me, somebody else, and looking at it and shaking his head. In fact, this gentleman was one of and is one of the top luxury realtors in the Silicon Valley, particularly in Palo Alto, for a very, very well-known group called Keller Williams. And so he calls me one day and he starts asking me these really smart, sophisticated questions. In fact, his background is one of banking, commercial banking, and development and really understanding numbers as detailed and as articulate, and he sees design in a way that like I don't, right? In fact, his house it's just a beautiful house off of University Avenue. Anyways, he calls me up, he starts asking me these questions, and I'm like, I'll leave his name out. He's a client of mine now, but I said, hey, what's your background? Who are you? Well, come meet with me, Brett. Come meet with me. I want you to see my house that I'm considering selling. But here's what I can tell you. I bought it low. I'm selling it high. I've got a huge capital gains tax. I've lived there since I bought it, so I can't qualify for the 1031 exchange. But I'm very skeptical about this deferred sales trust. In fact, I heard it from this guy, and it was such a bad presentation, and he didn't know answers to any of my questions that I just completely dismissed it. But someone else just told me about you, that you just gave a presentation in their office here in Palo Alto, and I want to just see if this thing's real. So come meet with me. So I go, okay. So I drive from Sacramento all the way to Palo Alto, and we spend a couple hours together touring his amazing house. Beautiful. It had a little garden in the back. It had like one of those full on like like chessboards. I don't know if you've seen those where it's like black and white, but they're like huge. And then like the pieces and the amazing pool. And
You have to like bear hug the pieces to move them around, right?
yeah, you got to like bear, exactly. You got to pick them up. You got to make sure you don't, throw your back out. But yeah, and so his house was amazing. Essentially, he had built it and for about $6 million, and he was looking to sell it for about 13. And again, 2 of the last 5 years, he was single. His kids were all gone. He was looking at a little bit of an exclusion of $250,000, but above and beyond that, he's looking at this huge capital gains tax, right? So he says, Brett, I want to start from zero, A, B, C, right? Just start as if I don't know anything. Walk me through this. Give me the deal stories. Give me the track record with the IRS. And so we spent about 3 or 4 hours together. And by the end of that meeting, he said, you know what? I want to take the next step. I'm still skeptical, but I need my CPA to say yes. He's one of the top CPAs in the Silicon Valley. And I sent all my clients to him. He's my personal CPA. Let's bring him on. I said, great. Let's bring him on with the tax attorney, right? So I always like to say, get the brain surgeons together with the brain surgeons. And I'm a trustee. And although some people might think I'm the brain surgeon, I'm not the brain surgeon. I'm just the nurse. Some people say I'm the nurse practitioner. Okay, sure, whatever. Check you in for surgery, right? But before we get surgery, let's get your other surgeon who's a CPA in his own right, a surgeon in different things, with the tax attorney, CPA, who created this thing, and let's get everyone in the room. All right. And he said, okay, great. So we got everybody in the room, and we had the first call for a full hour, and basically we just he and I stayed quiet, and the brain surgeons spoke, right? And they went through everything. By the end of it, he said, you know what? I like it. It's good. He answered all the questions. It makes sense. It's actually very simple. It's just an installment sale. It goes back to 1920s law. It's a seller carryback. That sounds good. And so this would be my thought, and for anyone who's listening to this right now, is to first make sure that you don't have to make this decision by yourself, right? You can bring in your trusted advisors. You're not having to leave your old advisors. We want them to bring in as a team, get the brain trust together. It might be new to them. They might be skeptical, and that's okay. We invite that. And oftentimes 9 out of 10 times, those CPAs end up joining our strategic alliances and start offering the Deferred Sales Trust to their actual clients, right? Once they know that, oh my gosh, these surgeons thousands of times have never lost a patient on the table, and no patients have died, and no patients have gone to jail, and this thing is still going. Wow. So maybe I can actually refer people, my clients who have these problems, who haven't been able to solve them, to this group. So fast forward. Now he's got to sell his property, right? Well, the challenge becomes, by the time it was about a $12 million, he was maybe a little bit overpriced. The market dropped, right? And he also had some debt on the property. So there's some challenges here. And then we're working with Old Republic Title Company. And this title company, although the escrow officer, she's brilliant, she's been there for 30 years, she had never seen the Deferred Sales Trust. So now there's a whole nother thing to overcome, which is whether or not Old Republic their legal was going to basically allow this transaction. Now realize, for escrow companies, they're typically not motivated to be that accommodating for deals that are already in progress. So the property got under contract, and typically also in the Bay Area, they do very short contingencies, and they're typically all cash, right? And it's like 7 days or 10-day close, and it's like, boom. So I had told him to use a different title company, but for other reasons, he decided to use this title company. And he's one of the top in the industry for 30 years. So he had all of it, he's all of his processes and procedures. Now, fortunately, the Old Republic escrow officer was amazing, and she was accommodating, and she was able to go to the powers that be and explain what it is in a way with us to approve it, and we did the deal, but it wasn't without its heartache. So my other thoughts on this part of this deal is to make sure you're working with those who've already done this, right? So they can save yourself or your clients the stress of not knowing, right? It's like showing up to a surgery with a doctor who's never done that surgery and saying, hey, I want you to do surgery. He's like, well, I've never done it. Just go with the escrow teams that we have, and we use a group called Orange Coast Title. An amazing escrow officer named Susan Trujillo. She's a strategic alliance, and she is smart on the Deferred Sales Trust, and she's experienced to close the deals. And so that is always our recommendation for anyone in California. Then we have others across the U.S. as well, if you are looking for this for your transaction. So now we get her on board. He's on board. CPA's on board. And then we closed the transaction. Now, realize that his tax liability was so large and his debt was so large that without the deferred sales trust, the whole deal would have fell apart. Okay. Meaning he couldn't sell if he couldn't defer the tax. Meaning the real estate professional couldn't get a commission. Meaning escrow couldn't do a deal. And that's part of what I was saying to Old Republic. I'm like, look, if we don't do this, we need to transfer it to another escrow company who can. But if you don't do this, like, you're not getting paid. The deal's not closing. Everyone loses here. So let's find out a way to make this a winner. If you need to sign a hold harmless or whatever, like, he's going to sign it, or it's just accommodate us, right? And they did. So he closed. He also second moved out of California to Nevada, established residency in Nevada, delayed his income from the trust, and also had income come from the trust once he established residency in Nevada, which does what? Well, lowers his overall tax liability. Okay. And so it was an absolute winner for him. And with that being said, Jake, I'm going to pause and see if there's any gold nuggets you want to pull out of that.
It is a very thorough process that we go through, and anywhere along the way, things can get tripped up. One of the big things that I pulled out of it, Brett, is the fact that we're there helping the clients navigate everything. Whenever there's a monkey wrench in the mix, whatever, we're there to pull it out and provide another solution. I think the other day the client actually told us, Brett, that we're the solution people. Like, he says, we're going to change your titles. All those initials and things, they don't mean anything to me. We're just going to say solution makers. And anyway, so moral of that story, what I'm pulling out right here is the fact that the process, everybody in the mix of making something like this happen has different motivations. We're there to make sure that everybody's taken care of. Every step along the way gets taken properly. And that at the end of the day, from a compliance, from a legal, from an accounting, from all these different standpoints, we're there to check the box and make sure that it's all done, and make sure that the client doesn't have any unmet expectations, as well as that the client doesn't have any negative surprises.
Absolutely. And part of that too is it helps that you have professionals as a team. It's a team sport here. I say Deferred Sales Trust is a team sport, and we're all bringing our expertise to make it work well. And so part of that is, like, even speaking with the representing buyer's broker who's trying to understand this. And I'm saying, well, I'm a commercial real estate broker myself. I started at Marcus Millichap. I'm with EXP Commercial now, and I've done over, $100 million in commercial real estate. I actually have listings I'm doing now. So I'm actively a broker as well as a deferred sales trustee and expert. And that is good because I can come in and help to educate and help, break it down for things that otherwise people don't understand. And then likewise, Jake trained CPAs, and he looks at multiple tax strategies over the years. He is a financial planner himself. He helps the folks invest the funds. And so that's another big part of this is, well, why does it work? How does it work? And where and how are the funds invested? And then the tax attorney says, well, with the IRS and all of this together, we do this at no cost, no obligation. This is the cool part, right? You don't charge a dime if the buyer doesn't close, or if the deal doesn't work out, or if you just change your mind. Like, we are here to just give you this clear option. Now, that's why we have the minimum size deals. And we found a home run is typically $1 million net proceeds and $1 million gain. That typically means it's a home run, right? If it's lower than that, if you have two, maybe at 500, it could still equal a home run. But other than that, it's going to either be a triple, a double, or a single. And then it's up for you as the client to find out if you want to do that. But more likely, we're typically setting that minimum because we want home runs for everybody. Because let's face it, Jake, if the liability is not big enough, if the pain's not big enough, right, then the solution or the value may not be there. So any thoughts on that?
Absolutely. So in fact, we actually had to talk a client out of this. The client was just super excited to have the deferred sales trust as a financial tool because it's so flexible and there's so many things that you can do with it. And we essentially just said, well, for us to help you and for us to spend the time with you and everything else, it needs to be beyond the shadow of doubt in your best favor. So if there's a large amount of debt against it, if the basis is 900, even if the deal's $1 million, does it make sense from a tax perspective? And so sometimes our job is as much to talk people out of it as to get them into it when it's appropriate.
Absolutely. And let's talk about ways to make it a single, double, triple. And I want you, the analogy or home run is baseball, right? So a single's great, double's better, triple's really good, and home run's the best. So how do we move from single, double, triple, home run? Well, the first thing is capital gains tax deferral itself. That's the first kind of leg, right? This is what it's doing. It's deferring the capital gains tax, and that's where we like to have the $1 million net proceeds and $1 million gain. Well, how do we make that home run go to maybe a 2-run home run or a 3-run home run or a grand slam? Well, we can add in what's called income tax deferral. So remember this client who lived in California, established residency in Nevada. Not only was it a home run for him up front on the capital gains tax deferral, but now it becomes a home run, a 2-run home run, because it's, guess what? Income tax deferral. Now, it's an absolute grand slam for him as a whole because he wouldn't be able to even sell his house at all, right? So we want to stack, I guess, value or the offer on top of itself to say, these are all the reasons. So those are 2. Now, the third one that you could make it a home run is the ability to lengthen the time. So a time horizon is the number one way to help you create and preserve more wealth. The more time you have, the more opportunity you have to go through some ups and downs. And therefore, if you don't have to pull from the trust, you can allow it to grow and build. So for example, let's say you're at a $700,000 deal. In fact, I had someone call me this week, and they had about $150,000 tax liability. And I said, it's kind of like a double. And she goes, well, how do we kind of make it a triple? I go, well, do you need or want any of the income right away? No. Okay. So what if we delay that 8% that's compounding, right? And let's let that 700 start to grow for a couple of years. Do you see how I can take this from a double to maybe halfway between a double and a triple? She's like, yeah. And I go, well, how do we go the reverse? Like if someone's at a double, like someone might even be at $1 million, by the way, of net proceeds and $1 million gain. And although we think it's a home run up front, the way it becomes a triple or a double is they say, well, I need to go buy a primary home with the money. Well, hold on. We can't defer capital gains tax with that funds on a primary. So are you sure you need to buy a primary home with that? Or is there like an IRA or other places you could pull from where we can defer the tax or you can borrow against? Because some people have it in their mind, and Becca, this would be good for you, maybe some thoughts for you as a luxury realtor. I'll bring you in here in a minute. Is they say, hey, I want to sell, but I need it for my next thing. And I have this idea that I'm going to sell in California for $5 million, go buy in Nevada for $1 million, all debt free. I want to be debt free. That's been their dream, to be debt free, right? And that's a cool dream. But I also say this. I say, well, do you really want that? Because it's kind of like you're borrowing at 33%. 33% is on the sale of a primary home in California, right? You don't have 37 because it's not an investment home. I said, it's kind of like borrowing at 33% when you could borrow at 3%. And why don't you just take a portion of that for the down payment, go get debt, which is at all-time lows, 30-year fixed. Why not get that? And then use the trust extra amount to arbitrage to pay down your debt. And once they think about that, and kind of to Jake's point, like, yeah, we're solution makers, right? Let's just adjust that, still achieve your outcome, but not have to pay like 30 or 40% in tax. So that's how it can become a double. Now, if they say, well, Brad, I've had clients, potential clients say this, well, I just want to be debt free. Okay, well, the deferred sales trust is not great for you, right? Even though you're at the million, by the time you take all that money, or $500,000 out or $800,000 out, you just depleted the whole value for this trust. Therefore, do not use the deal. Just pay your tax and go do the thing. Does that make sense, Jay? Or actually, Rebecca, does that make sense? Any questions on that or thoughts on that? Because you're in the luxury real estate world.
Yeah, and it makes a lot of sense. And definitely borrowing against the money that you set aside in the Deferred Sales Trust, it sounds incredible. It's definitely the way to go about it. I live with somebody who wants to be debt free, and we keep it, we keep having the conversations about how much money is plentiful these days and available at low interest rates. And that doesn't necessarily make the right sense.
Right. And by the way, the Deferred Sales Trust, with investing with Jake Muller in securities, it can be liquid investments. So it's not as if you have to, if anything ever really goes south and a year or two from now, you're not feeling great about it. Well, just liquidate it, pay your tax, and then go pay off the debt over there, right? Especially if it's a primary home where you can get this amazing financing,
right? And
there's no prepayment penalty on that, right? So these are all things that we can work with. Now, I want to also clarify a thing. You can't borrow against the trust to go buy a primary, okay? But the interest that it earns, you pay tax on. You could use that to pay down the primary loan, right? So again, if I had, let's give an example. Let's say I had a $3 million property and I was going to pay $1 million of tax, okay, at zero basis. So, and I said, yeah, but I just so really want to buy this other house at $1 million, okay? So I'd say, okay, well, you could sell at 3, you could be left with 2 after tax, and you can use that $1 million for that down payment. That's option 1, okay? And there's nothing wrong with that. That's cool. You feel really good. That was your goal. Or we can put all $3 million into the trust. Go find a down payment somewhere else. I don't know where you're going to find it. Okay. If you really need to get, and let's put a 30% down payment. Let's be very, let's be kind of conservative. It's 20 or 30%, $200,000 or $300,000. If you can find it somewhere else, let's go get that loan at, let's call it $700,000 at 3%. Now let's earn on this $3 million, right? You have a full $3 million. Let's earn, ideally, hopefully we're earning around 8% net of the recurring fees. Not a promise, not a guarantee. Let's take that arbitrage of that extra $1 million working for you, and let's just start to pay down that loan. And at a certain point, there's a break-even point, right? A threshold. And then once it's paid off, guess what? That $1 million is still working for you, right? It's still working for you. So it's that time value of money. And so there's where we're doing that. Now, what if I wanted to buy investment real estate? Well, or start a business, right? Can I partner with the trust to do that? Yes, this is a cool thing, right? So when I said you can't buy a primary with it, but you can partner with it to do investment property or start a business, or with your family, with your friends, with other folks, bring it together. Why? Because it's business purpose, okay? So I don't want to confuse those two. So again, it's clarifying what you want your wealth to do, how you want it to do it, and then we'll help you navigate to see if it's there. Jake, any thoughts on that?
A few, actually. So absolutely, very good point being made. 3 days ago, I had a client come to me and say, hey, I want you to do a REIT. I want you to do a REIT for me. And okay, well, tell me a little bit more. Why do you want a REIT? Essentially, he just wanted to take money out of a property he had, sell it, invest it in another property. And his solution was to do it all inside of a REIT. Okay, well, who else are you going to have with you in the REIT? I mean, are you going to do a syndication where there's multiple people inside, multiple properties, you're all coming together? And no, just me. Oh, well, let's talk about the Deferred Sales Trust and how that's actually probably will incur less expenses and be a lot more efficient for what you're trying to accomplish, especially since this is just you. The point being made here is, in real estate, if you're going to do like a general partner, limited partner, the Deferred Sales Trust can be one of those. The Deferred Sales Trust can be the venture capitalist, so to speak, in this type of an arrangement, and the JV joint venture moving forward. Other people in other business ventures, we can do it with real estate. We can do it with, helping somebody with a Class A funding for their, or Round A funding for their business, getting it to the next level. A lot of opportunities out there. And the magic of it all is that we're able to take these transactions that would otherwise be taxable as highly appreciated assets or, whatever, we're able to continue to roll them forward. And the IRS has tested this and they've been okay with this in the sense that, hey, just like inside of your 401k, if it were just stocks, bonds, and mutual funds, we sell out and we buy again, and we sell out and we buy again, and we sell out and we buy again. But now we can do it with real estate, we can do it with crypto, we can do it with business interest, we can do it with a lot of different types of assets. And it becomes a very magical thing, which earlier on, my client that really wanted to get into this, and we had to talk him out of it because he wasn't quite eligible. It didn't quite make sense. He really wanted to get into it because he understood that part. He understood the flexibility of it all. And he was just super excited. And he wanted to participate, even though it was a little too soon for him.
Fantastic. So let me touch on 2 other ways too to make this thing a home run, or make it from a double to a triple, or a home run to a 2-run home run, or a 3-run home run, or a grand slam. Okay. And I'll actually give a gentleman, in fact, he called last week, and he called me thinking a home run. He was thinking a home run, right? He had a highly appreciated asset, and he was thinking defer the capital gains tax. And then I got to talking with him a little bit more. In fact, his deal, this is funny, Jake, his deal was too small. And I was very close to just like saying, sorry, it's too small, and going on to the next thing because I had such a busy day. Everything was just piling up on me. But I kept listening, and and he just seemed really experience. You know, I could tell he had the gray hair, and I'm like, this guy's smarter than me, Brett. Like, don't think you're smarter than him. He's smarter than you. Listen to him. What is he saying? What is he looking up against? So I just kept asking questions and trying to learn about him. And he's from Texas, and this is one of the and I said, oh, this is just one of the properties. I said, do you have other properties? He goes, oh yeah, I have a lot of other properties. Oh, really? He's like, oh yeah. And he starts telling me about all these other properties that he has. And oh my gosh, what do you know it? His estate is, 30, 40, $50 million. Okay. And so I said, have you ever considered the Deferred Sales Trust as an estate tax plan? And he says, well, what do you mean? I said, well, Biden, he's talking about eliminating the stepped up basis. Boom. He said, the Deferred Sales Trust can solve that? And I said, yes. He said, book me with the tax attorney next week. I'm ready to start talking. Right? It was like, I called you for a home run, and all of a sudden, Brett, you're talking about a grand slam, legacy changing, eliminate the need for the stepped up basis, as well as the estate tax of 40%. So sometimes the deal might be small, but they might have other deals or other friends and family. And you want to make sure that A, you're asking the right questions, B, you're listening well, and then C, you're letting them know that, hey, this thing can be so much more for you and your family. And so that is another way to make it a home run. Last one I'll leave with here as well is depreciation recapture that is subject to capital gains tax, or your property or business that you're selling has no depreciation, or even like cryptocurrency, it doesn't have depreciation. Like we have a crypto client, right? Jake, we're talking about, you and I. He's got about 10 million in crypto. Guess what? He's not being able to depreciate the crypto, right? It's just an asset. There's no depreciation. He's going to be able to sell and potentially buy some investment real estate, which guess what? Can have a brand new depreciation schedule, of which he can take some cash flow, and the way we structure it, give him a majority of that depreciation to offset the cash flow, right? Because some people are doing these staking things, which is cool. You're staking crypto and you're getting interest off of it. But guess what? That's all taxed as ordinary income tax, and there's no depreciation to offset that, right? And so this is another way where you ask the question like, well, what's your depreciation schedule on that multifamily property that you've owned for 27 and a half years? It's a $10 million property. Well, it's at zero. Okay, well, what if we were to sell, defer the tax, and literally go buy a property down the street that's very similar to your property for 15 million or whatever, right? Probably get a similar return, but now that we have a brand new depreciation schedule on that 15 million, guess what? All of that cash flow that you were paying tax on can be washed away, especially if we do something called a cost segregation. So there's other ways to move it from a single, double, triple home run, or a home run to a double, 2-run home run, 3-run home run, or grand slam. Rebecca, any thoughts on that?
Brett, you're kind of talking a little over my head. It sounds like I need to definitely brushing up on a little bit of my financial terms. So,
what part of that? This is important. What part of that was confusing? Because if you're confused, then our listeners are confused too. So, what part? What would be your question on that, or what part were you like, Brett? That part was a little confusing.
Well, I understand the depreciation recapture. I understand the, selling a property that you completely depreciated and buying another one and starting that part again. I get that. That's pretty logical.
Yeah.
Cost segregation, never heard of it. So
let's talk about that. Okay, so what is cost segregation? So you have two forms of segregation, or two forms of a straight line depreciation, and then you have what's called accelerated depreciation. So cost segregation is typically just a study on a piece of property to allocate different components of the property, like an HVAC unit or a roof or windows or all of these fixtures. They all have a useful life. Guess what? They're not all 27 and a half years. So what the IRS has said is, hey, look, if you can do a study and show us that certain components aren't lasting as long as 27 and a half years, we will allow you to accelerate that depreciation into these components. Some of them are 15 years, 10 years, 7 years, 5 years. Some of them maybe even a little bit less. Mm-hmm. And therefore you can take them all up front or sooner, right? Which kicks in the time value of money, which says, well, if it's going to take me 27 and a half years to defer or to get depreciation on a $15 million property, well, what if I can take, and let's just say that's $12 million, right? Because after land cost, well, what if I could get like 5 million, like in the first year or two, right? For certain components. So you can hire these firms. Jake and I work with some amazing ones. Again, this is like a niche of a niche. Like, so we're not doing the surgery here. You go hire a surgeon. It may cost you around $5,000, $4,000. They do the study. Boom, you can get that going right away. Does that make sense, Rebecca?
That makes perfect sense now. Thanks for explaining it, especially since my husband's a builder. I understand how long things last, those kind of, different components of a home. So thank you. Appreciate that.
You are welcome. Adam, by the way, Adam has a question for us. Now, he's on mute and he put it in the chat. Adam, you are welcome to unmute and ask the question, or I can also read it. Totally cool, up to you. And I'm going to read it now. But if you want to chime in. It says, Brett, hi Brett, any possible way to invest in a house that is not the seller's primary home, but for someone else to live there that may be a family member? And the answer is yes. So can the Deferred Sales Trust, via the JV partnership of a new LLC, buy an investment property for a family member to live in? The answer is yes. However, this is important. It's got to be fair market rent, right? And it's got to be above reproach on a business dealing, right? So with the IRS, when they give us these tax incentivized ways to do things, they don't do it for our personal. They don't say like personal stuff or a family deal. That will fail it, right? We will cross over the line. But if it happens to be a family member who's paying fair market rent that a general person would pay, so if the rent is $2,000 a month, pay $2,000 a month, right? If it's $2,000 a month is the fair market value and you're charging $800, they're going to say, hey, look, you're giving them a deal here. If the IRS audit comes, you're really using this for personal family stuff. Therefore, pay us our tax. Like, this isn't what this is. You're out of bounds there. Jake, any thoughts on that?
Absolutely. And we like the clients to take advantage of everything that's available to them, but we're also very conservative and we provide advice that can be defended, if that makes sense.
It makes perfect sense, right? So we would actually, if you're asking us, we would say stay as far clear of the gray as you can. I have some clients who are like, well, can I buy an Airbnb rental, do the Airbnb, and then go and hang out there for a couple weeks, or have my friends come hang out a couple weeks? Yeah, the answer is yes. But again, what we would recommend is you just pay rent and have them pay rent, a fair market rent, back to the LLC. So it's all in line, right? Well, you're like, it's paying yourself. Yeah, it's paying yourself, but it's all trackable. It's all consistent. And it's not something where you're stepping over dollars to jump onto landmines, right? And we don't want a landmine for you or the structure or everyone else. So we generally say, yeah, within reason, business purpose, that's fine. You're not doing anything ethically or morally wrong as long as it's fair market value. So excellent. He says, perfect. Thanks for that. So that's good. Thank you, Adam, for the question.
I would just add a little bit to that, Brett, in the sense that, even coaching other accountants and other things like that, the short answer sometimes out of context is the wrong answer. So a lot of people say, well, can't you do that? And the short answer is yes. But if all you do is on the tax return deduct it, it very likely, if it gets audited, could be disallowed, because the real answer, which is not necessarily just the short answer, it's in line with the short answer, but the real answer is you need the documentation, you need to go through the process, you need to prove intent. And if the IRS is going to audit it, they're going to audit it 3 different directions. They're going to say, you were there with friends and family and everybody else. Did you pay rent? Did you not pay rent? Well, did you do sweat equity? Well, what does that mean? Well, did you pay for repairs? Did you do all these other things? If you didn't do that, so they're going to look at things and they're going to check off their boxes. So it's kind of nice to have the IRS manual to know what they're going to check, so that you can lay the right breadcrumb trail and do things the right way. So even though the real answer, abbreviated, is yes, the honest answer is yes, if you include all these different things. And that's what we want to make sure that our clients always have. They have all the right documentation. And we don't plan on people having audits, but we plan against the occasion where 1 out of 1,000 might get an audit. And from there, even that 1 out of 1,000 is taken care of.
Mm-hmm. Exactly. Yep. 100%. So now let's get into the crypto portion. We've been talking all about deal stories. And we did a little bit of crypto, but right now we've seen a kind of a Ethereum jump from about 3,000, almost 4,000. And now it's hovering right around the mid 3s. Those are a couple big crypto clients that are looking at this. I talked to another one yesterday. He has a big stake in XRP, in Cardano. And then my other client who closed, who actually, by the way, I'm learning more and more about my clients. He used to work at Ripple, right? So I'm on the phone with him. He did a big Ethereum Bitcoin case. And I'm like, hey, what do you think about XRP? And he's like, well, I used to work at Ripple, right? I'm like, oh, really? He's like, yeah, Ripple is the company that created the XRP. And he goes, yeah, they get confused a lot, but it is technically separate. But he goes, basically, and so he's giving me his insight, and he's been in the tech industry for 20 years. He told me about a couple other cryptos, but the point was, our goal is to hit another number for him to take another big tranche out of his holdings for the Ethereum, and he was giving me a couple other ones. And so just again going through this process of learning these things, we also Jake and I officially opened up the second ever Kraken Deferred Sales Trust. That's right, Jake. For Jake's, he's going to be a co-client, but Jake brought this gentleman, and this gentleman was excited. We went through it. They asked him for his information, go through it. So Jake, any thoughts on opening up the second official one? We haven't closed anything on that one yet, but it's open and ready to go.
It's open, ready to go. It's ready for the test transaction. We call it a test transaction because we always like to put through a quarter or whatever and just make sure that the machine works, right? This second go, so much quicker, Brett. My goodness. Not just in time, in emails and everything. It's like Kraken knows who we are now. And when I say we, like they know who Brett is. He is the trustee that does all the communication with them. And literally moving forward, we're able to provide, again, solution to a lot of clients that otherwise, hey, with Coinbase, hey, I want to open up a business entity account with Coinbase and it takes a month. But they say that it should only take a week, but with all the emails and everything else, it's a month and a half. Some people just give up in the middle. Here, we're able to help people set up the digital account in the name of the trust, transfer coins into that, execute the sale from the trust itself so that it's arm's length from the client. We're checking all the boxes. We're providing that breadcrumb trail for the IRS. Rather than anonymity, we are providing transparency in such a way that we are in line with what they're looking for. And that way we can walk away from the transaction with no taxes owed.
It's a beautiful thing. Yeah, it's really a great thing. That being said, we're running out of time. So I'm going to see if Rebecca has any questions or Adam, anything else. Otherwise, we will regroup next Friday at 10 a.m. PST. Rebecca, any questions or thoughts before we jump out of here?
Nope, no questions right now. Thank you.
And remind folks, Rebecca, if they want to get in touch with you, where's a good place for people to find you? If they want to be selling like buy or sell a house in Truckee or the Tahoe area, and really good to hear, by the way, that the fires were stopped, right? Maybe touch on that too. People might be curious about that. Like you went through all that and all the maybe the evacuations. What were the kind of the feedback on the whole last month?
So the last month has been crazy. Definitely North Lake Tahoe, portions of the West Shore and South Shore were evacuated and definitely impacted by the fires. Everybody's been able to go back, so that's been awesome. Yeah, thank goodness for the rain and our firefighters and how well they did. But so that has definitely impacted the real estate in our area right now. With the fires and the smoke and everything, things slow down for a little bit. But if people are interested in buying or selling in the area, the best way to reach me is cell phone 530-448-9740 or Rebecca@RebeccaBunson.com. So
that's fantastic. And by the way, I want to give a little more context to the fire. For those who don't know, in the U.S., they rank fires like for let's say urgency or like impact if something burns down. This became the number one fire in America, right? And they sent. I was speaking to a buddy of mine at church, and he's a firefighter, and he goes, they sent the world to Lake Tahoe, like the world of firefighters. Like they just sent all of it, just all in. Like we've got to save Tahoe, do everything we can. And fortunately, they've been able to save Tahoe. Lord willing, nothing else will spark back up. We have some rain, but they sent everything and they stopped it. So any thoughts on that, Rebecca, last before we go?
Yeah, no, so grateful. They definitely stopped it. My daughter was living in South Lake Tahoe, so she was evacuated. So definitely hit really personal to me, but she's back there and things are going and Thank goodness they sent
Thank
everything,
Yep.
Yeah.
Yep. So thank you, firefighters out there, and thank you, first responders, and everyone else. So, Jake, for those who want to get in touch with you, what's the best place for them to find you?
If they go to alphamarktax.com, ALPHA, Mark, MARK, tax.com, 1-800-773-1848. Again, 1-800-773-1848. And,
excellent. I want to thank all of our listeners. I want to thank Jake, Adam, Rebecca. Danny, it looks like you're joining. We're just wrapping up, but I hope to see you next week for attending this mastermind, DST, Deferred Sales Trust, cryptocurrency, real estate. We're trying to bring all of us together to make this thing really simple, demystify this so that you can create and preserve more wealth or help your clients do the same. If you're listening to this on the podcast, capitalgainstaxsolutions.com, if you're listening to this on Expert CRE Secrets, we're here to help you out as well. If you're a business professional, reach out to us. You can go to capitalgainstaxsolutions.com. Make sure that you mention that you found us or saw us here, and we so appreciate that. And we'll hopefully talk to you again real soon. Invite someone next week, everybody.